technology. But what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
All right, live from New York and New Jersey, streaming on YouTube. It is Thursday, October 15, 2020. And I got to say, Paul Sweeney, surge in weekly jobless claims, surge in virus cases, a lack of any more aid coming. Investors not loving it, but I got to say that equity market's off its lows of the day.
Yeah, we are off the lows of the day, and the jobless number, it's higher than expected, higher than the trend is not the friend as it relates to the jobless numbers. We had that improvement coming out of the March-April timeframe. That improvement has really started to wane, and that's really a key issue. You got to get that consumer back online, and the jobless numbers are the ones that are high-frequency numbers that we get to look at.
All I'm going to say is there is so much going on. This is a day when I feel like 4 hours isn't going to be enough. Just going to put that out there. All right, let's get you going. Let's get a check on that trading day. Here is Charlie Pellet.
And I thank you very much. Stops dropping as the virus spikes. That is threatening growth. And right now we are looking at a down day on Wall Street. As Carol mentioned, off-session lows, but the S&P is still down 13, a drop right now of 0.4%. The Dow negative for 2020. It is down 38 points, down 0.1%. NASDAQ down 96, a drop now of 0.8%. 10-year yield 0.72%. Gold up 0.2%, 19.05 the ounce. And West Texas Intermediate crude is down 0.8%, also off session lows now at 40.73 a barrel. Stocks fell as Europe's biggest cities clamped down to curb the coronavirus, adding to concern that further restrictions could cause more economic damage. Also, traders are assessing data showing an unexpected surge in jobless claims. And that is the latest. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, much appreciated, Charlie Pellet. All right, let's set the Business Week agenda because we are, I just want to get right to it because there's so much going on. Michael McKee is International Economics and Policy Correspondent at Bloomberg News. He's in our Bloomberg Interactive Broker studio at Bloomberg headquarters. Dave Wilson, Stocks Editor at Bloomberg News. He's on the remote access from New Jersey. And Mike, in a nutshell, it looks like the weekly jobless are up, but the continuing claims are down. How do you make sense of this report?
Well, the bad news is the claims are up. We've talked about California each week for the last couple of weeks and how they are not adding to the numbers. They're using the same old numbers because they're still working through the back issues that they've had. And so the fact that we got a 53,000 increase in initial claims, not including any change in California, definitely bad news, suggests that the economy is slowing down, as the narrative we've all heard has. The fact that the number of continuing claims is going down is a function of two things, or maybe three. One is that people are getting some jobs. People who have been on getting claims are going back to work or finding jobs. Two is that they may have been rooting out, the states may have been rooting out fraud and cutting some people off. And the third is that people get 26 weeks of unemployment, and that is expiring for a lot of people. Now, there is an additional 13-week program that Congress put in place with the CARES Act, but people are moving from continuing claims into that program, and we're going to see continuing claims continue to fall and that program continue to rise because we still have more people out of work than there are jobs.
Yeah. So, Mike, how do you think our friends in Congress view data like this? I guess you could look at it either any way you want and spin it any way you want, but the fact is we still got a jobless problem out there.
We do, and it's probably only going to get worse. We saw a big jump this time, I would imagine, in part because of the airline employees who were laid off and the Disney employees who were laid off. Those people now collecting benefits, and that's just going to keep happening, maybe not in as big a scale, but as companies decide they're not viable, as restaurants come back, as it gets cold and nobody wants to go sit outside anymore for dinner in the Northeast.
I will.
Thank you.
Not me.
Your waiter thanks you.
Yes.
But that's going to continue to get worse. Now, I think what we have seen is that this is really bad for the economy, but it isn't moving the polls. And right now, the only thing that matters is the polls. Mitch McConnell, whatever you think of him, said it the other day. Until the election's over, probably nothing's going to happen.
Yeah, TikTok. Okay, it's certainly tough though for those people who could use and those small businesses that could use a little bit more help from the federal government. All right, so despite what's going on in the jobless market and still many being out of work, Dave Wilson, we're pretty much at our best levels of the session. The Dow was down 332 points. It's now down 32 points.
Right, stocks really sort of working their way back, and it's some of the beaten down areas of the market that are kind of helping things along here. If you look at the S&P 500, you see two of the top performing groups, energy and financials. And you talk about two areas that investors have pretty much shunned lately. You know, with the financial stocks, I mean, most of the reports this week out of the biggest banks didn't go over so well. Morgan Stanley lining up as an exception to that today, though. The shares are up 1% in the wake of their results. Third quarter earnings and revenue beating projections, especially with what happened with their bond trading revenue. That's certainly been a story across Wall Street this week as the results have come out. Bond trading revenue, Morgan Stanley up 35%. Only Goldman Sachs did better. So you have that going for the group. And on the other hand, the technology stocks, the communication services stocks like Facebook and Twitter that have been market leaders, they're actually down today. They're the worst performers among the 11 main groups. So, it's interesting to see stocks coming back, even as those market leaders turn out to be a drag on performance today.
Well, it's interesting. Literally 2 feet from where I'm sitting right now is my Peloton, which I did ride today, just so you all know. It's not.
Did you do the Hamilton ride? I'm dying to do the Hamilton ride.
It
debuted last night.
Yeah, I might try that. But our good friends at Peloton, they're being sued by Nordic Trek over that, some technology. Yet I look at the stock, Peloton's up 3% at a 52-week high.
Yeah, I mean, there you go. We've certainly seen that trend over time. The stay-at-home stocks doing relatively well. Peloton certainly a great example of that. I would just point out sort of on the other side, you think of what's trendy at this point. TikTok has certainly been trendy, but they have issues with the government. And there's a company called Fastly that provides cloud computing services to TikTok. And, the ByteDance, the owner of that company, is their biggest customer. Didn't quite spend as much as Fastly was expecting last quarter. Those shares are down 26%.
Hey, Mike, just sobering moment. That story that came out from the New York Times, about 8 million more have slipped into poverty since May as federal aid has dried up. So we know that this lack of stimulus, as it's run out, it's really impacted a lot of Americans. Just quickly.
Yes, and there were people who were cut off from food stamps as well this fall, and so that's having a major impact on those kind of levels. One quick note here. Indiana had 28,864 claims last week, 10,000 the previous week. They counted twice. So another problem with the jobless claims numbers that just came out.
I said at the top of the show, it's like there's so much going on, and I feel like things are just coming at us from all different angles, just crazy stuff. Hey, listen.
I'm going to go home and ride to Hamilton. There's nothing else to do.
Right? Like that could solve so much.
So many problems.
All right, Mike, thank you so much. As always, Michael McKee, international economics and policy correspondent at Bloomberg News. And of course, Dave Wilson, our stocks editor at Bloomberg News. He's going to be back a little bit later on. I truly mean it, Paul. I feel like I could do kind of 6 or 7 hours today. There's just so much going on. Politics, we're going to get the latest from the campaign trail, including COVID now in the Harris-Biden camp. So we'll do that with our own Ryan Teague Beckworth. We've also got the former mayor of Kansas City, Sly James.
Yeah.
He is working on getting out the vote, and he's also going to talk about the impact of the virus on that, as well as education. And then we're going to talk a little bit about disruption in the financial space.
Yeah, there's a lot to go through here today, whether it's companies and earnings or the stimulus or lack thereof, but we're trying to stay on top of it.
Yeah, and speaking of disruption, we've got Wealthfront. We're going to talk with the co-founder and CEO. They've been disrupting the financial space. And then we're going to kind of go into hyperdrive on a few transportation stories. We've got an Indian motorcycle maker who's trying to go after Harley. Right?
Retro look.
I know, I love this. And then we've got COVID and a crowd of startups shaking up car buying. And then we're going to end up with a little poker. So I'm not going to give you guys too much more on that. Let's just quickly do the Bloomberg Business Week Bite of the Day. One number that tells us a lot. It's 16%. U.S. colleges colleges are seeing sharp declines in students. The story, I saw this. That number of first-year undergraduates falling 16%, while total enrollment slid 4%, led by international students. And empty seats mean revenue from tuition, dormitories, and dining halls is being hurt at a time when some colleges are posting low endowment returns. For someone who's got a senior in high school and thinking about next year, I'm always wondering, how is this all going to impact,
I know.
you know, in a good or bad way, who they accept for the next fall. All right, let's get back to world and national news. For that, it's over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, less than a month after a coronavirus cluster erupted at the White House, Democrat Joe Biden's campaign is facing its first cases of COVID-19. Bloomberg's Nathan Hager reports from Washington.
Biden's running mate, Kamala Harris, says she is canceling travel through this weekend. That's after her communications director, Liz Allen, and a member of her flight crew both tested positive for the coronavirus. The Biden campaign says Harris has had 2 COVID tests in recent days, including one last night, and both came back negative. Harris had planned to travel every day until Election Day, including 2 stops today in North Carolina. Now she's staying off the campaign trail until Monday. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Senate Judiciary Committee is wrapping up 4 days of confirmation hearings on Supreme Court nominee Amy Coney Barrett. Chairman Lindsey Graham addressed efforts by Democrats to slow down proceedings.
I'll let you decide what we do today. We're going to vote on the judge on October 22nd, but I would prefer, if it's possible, we could hear from the panel, but I'll leave it up to my colleagues.
Well, Democrats say the proceedings have been rushed. They complained that Barrett has sidestepped questions about presidential powers, abortion, voting rights, and Obamacare. 3 years into the Me Too movement, a new report finds almost 3/4 of people reporting workplace sexual harassment suffer from retaliation if they complain. The study found more than 7 out of 10 people who reported sexual harassment at work said they face some form of retaliation, up to and including being fired. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney, and we're IBing each other because there's so much going on today. There's a story that trended high, and our producer, Ariel Agami, certainly caught this, and this is what Bloomberg folks are reading. Robert T. Brockman, he's a Houston software tycoon. He was charged with using a web of Caribbean entities to evade taxes in what may be the largest prosecution of its kind in U.S. history.
Yeah, this was an elaborate system with offshore accounts, trusts. But what kind of jumped out at me is this just shows you the IRS doesn't stop. The government doesn't stop for these things. They keep coming at you, and they will track you down. And this case has just been going on for so long and involves a lot of very prominent people. Robert Smith of Vista Equity Partners among them. But it just, again, to me, it just shows when there's big money involved, and even, I guess, smaller amounts, boy, the IRS, you do not want to mess with those folks.
No, exactly. Which also, all right, this is totally a tangent, but it makes me think, like, why can't we create an app either using the IRS to vote online, right? Like, they know how to track information, how to find people.
Yes.
Like, it says to me that, okay, the government can, when it really wants to be efficient, it can really work well. And it makes me wonder, like, we should be able to figure this out.
Yeah, instead we have lines, going, all around the block and down the street as people trying to vote early. And then when you do go into vote, it is the most antiquated process. You sign something, who knows, there's using paper and pen, and it's you're right. Why aren't some smart kid in Silicon Valley coming up with some app and says, here's how you vote?
Exactly. Sorry, I told you it was a tangent.
Yes.
Anyway, this is a great read. Go to Bloomberg.com because apparently Brockman earned about $2 billion in capital gains made through his Vista investments. We're talking about Vista Equity Partners. There's a lot of moving parts to it, but you're right, Paul. I mean, the IRS, they were on a mission. It's a 39-count indictment, so there was a lot of stuff going on here. And it's just pretty amazing when the government sets its mind out to do something, they can find all the missing pieces. Just going to put that out there. All right, you're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World headquarters, I'm Charlie Pellet. Stock slump, but we are well off session lows at the worst level of the day. The Dow had been down 333 points, down 1.2%. Right now, though, the Dow is down 23 points, a drop of 0.1%. A recovering S&P still on the minus side, but down 10, a drop there of 0.3%. Again, at the worst level of the day, the S&P had been down 1.4%. Nasdaq lower now by 90. It is down 0.8%. 10-year yield 0.72%. Gold up 0.3%, 19.06 the ounce, and crude slumping 0.9%, down 37 cents a barrel at 40.67. As for the why, comes down to coronavirus. Stocks falling as Europe's biggest cities clamp down to curb the coronavirus, and that's adding to concern that further restrictions could cause more economic damage. So the S&P 500 index down for a third day, recapping lower now by 11, a drop of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, Paul, remember how yesterday, I can't remember what story we were talking about. Was it a hedge fund story or something? And about, there's certain things you put in like a headline on the Bloomberg. Yes. And often it has to do with hedge funds or bonuses.
Yep.
And like it tends to trend really high among the most read.
We get what we call read spikes.
Yeah, totally, right? Well, this is one of them.
Yes.
And the headline on it is, Wall Street traders to take home a smaller slice in a banner year. And our own Jenny Serrain wrote it. She's Bloomberg News finance reporter, and she joins us on the phone. Jenny, I want to know, what's going on, and I'm curious how small, because I always feel like when you're talking Wall Street, it's still kind of large by most people's, estimations.
Yes, that's very important context, definitely to include. I think the main metrics that we've been looking at this week is just how much of this huge gain in revenue are traders really going to be able to take home. And it looks like so far the amount that banks are setting aside is just less than what they maybe set aside last year. But to your point, Carol, these traders and investment bankers, they make far more money, actually about 5 times as much money as other private sector employees in the city. So, their average salary is somewhere in the neighborhood of $400,000. Their average bonuses are somewhere in the neighborhood of $150,000. And so they're just averages. So there's folks out there that make way more than that. So definitely runs the gamut. But, even though they've produced these really solid results, really help prop up their banks, they are taking home that smaller slice.
Paul, you're someone who understands this world really well. Isn't that kind of weird?
Yeah, I mean, I think what I'll say, Carol, is what's most important, obviously, is the actual total dollars you bring home, having spent more than 20 years on Wall Street. But that compensation ratio, and Jenny's got some great numbers in here, Morgan Stanley, 36%, Goldman Sachs, 33%. In my day, back in the day, which wasn't that long ago, it was closer to 50%, 50.
Wow.
That's when Wall Street was a good game. Now it's just a game. Jenny, is there a sense here that there's any turnover risk on Wall Street from some of these ratios coming down, or just given the world we're in, the management feels pretty comfortable?
No, I think it was actually something that Goldman Sachs CEO David Solomon raised. He said, obviously other parts of the bank are suffering, and so we have to kind of keep in mind the fact that we had to set aside billions in provisions for credit losses and things like that. But that retention risk is real, and we can't lose our good talent in a year where they've produced these really solid results for us. And so he was really saying, we are keeping a lot of our philosophy the same, but they do have, when profits sag over 30%, they can't just ignore that. And so that's probably a little bit of what you're seeing with these ratios coming down.
So what does it mean in terms of potentially losing talent? Or is it not enough of a change that we're going to see a lot of, people moving some firms to go to another firm?
Well, I think it'll be interesting to see kind of where we net out. Obviously the fourth quarter is the big kind of where the rubber meets the road when it comes to these decisions. So it'll be interesting to see where we net out. And I also think the other weird part of all of this is that it's an election year. And so you've got politicians on both sides of the aisle that have been known to, beat up on banker bonuses from time to time. And so I think there's a lot of pressure on the banks to keep those ratios low. However, they also know that this is a real risk, and that, especially in a year where you've got desks producing record results, that they could easily find another job. And and they don't want to see that happen. So I think it's a tightrope for them to walk for sure.
So, Jen, yeah, there's another story on the Bloomberg terminal saying that could be a banner. This is going to be a banner year for Wall Street trading, maybe $100 billion in revenue here. Is there, when I was on Wall Street, there was, big disparity between, the big whale traders and then the junior folks. Is that still the case, or is it much more of a tighter band these days to try to rein in some of those star traders that could really set you back in terms of compensation?
I still think there's a few star traders out there. I mean, I'm sure on the whole, yeah, they've tried to rein it in, and I think they definitely learned their lessons from the last crisis, getting called vampire squids and the like. So they like to avoid that at all costs, but there's definitely still traders out there that are, based on the results they bring in, they're bringing in big bonuses as well. And so I think while they've definitely learned their lesson and have this real eye towards compensation, they're also still very aware that these guys could easily leave banking and go to the hedge funds or go to a competitor, and they don't want to be ever trading against them. So it's definitely a weird little line for them to walk.
That 2010 Rolling Stone story about Wall Street, and, the great, the vampire squids, man, that's it's just a great Trivial Pursuit question. It is interesting though, you feel like Jenny, things have definitely changed from the financial crisis. So it's interesting though to see, and I feel like bonuses, we learned a lot, right? Coming off of the crisis about what that means in terms of compensation. But it is surprising when you're looking at, as Paul mentioned, a banner year, and as you report, and yet it's being squeezed. It just, to me, doesn't quite make sense.
Well, I think a lot of traders would agree with you. And I guess
surprise.
Well, David Solomon actually talked about this week too. He was like, in a normal year where we don't have to set aside a ton of provisions and therefore our profit isn't, totally zapped by that, we don't really think about, that's not as much of a consideration. But because that's the environment we're in and the world we're living in, it has to be part of our considerations as we're making these compensation decisions. And so I hadn't, I guess, really thought about it that way until you mentioned that this week. And I think it's a good point that, for a lot of years, traders can probably, squeak by without really thinking about the broader profitability of the bank. But, this is the year where everyone's worried about credit and what that's going to look like. So it has to be kind of considered.
Yeah, it's just another uncertainty that everybody has to think about. All right, Jenny Serrain, thank you so much. As we mentioned, this is among our most read stories on the Bloomberg. If you want to read the whole thing, just go to Bloomberg.com. Jenny Serrain, Bloomberg News finance reporter, joining us on the phone. You're listening to Bloomberg Business Week. We've got our daily check on the virus right here on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Master, Paul Sweeney, both of us working from home. It's Thursday. Just checking my calendar here.
Yes, you got it today.
Right? I know exactly. We've got to do our daily check on the virus.
Yeah.
There's a lot of stuff going on, and we all are watching some of those numbers increasingly go up. We're definitely seeing it overseas, but it's also happening here. Although New York seems to be settling down, which is a really, really good thing. We'll get to that in just a moment. Let's get back to your top business headlines, though. Check in with Charlie Powell.
All right, thank you very much. Let's get right to the numbers. Off session lows, the S&P's down 10, drop now of 0.3%, have been down 1.4%. The Dow tumbling 25, down 0.1%. The Dow have been down 1.2%, and NASDAQ down 89 now, a drop of 0.8%. 10-year 30-second 10-year yield 0.72%. Gold up 0.2, up $4 the ounce at $19.05. And West Texas Intermediate crude down 0.3%, $40.90 a barrel on WTI. Stocks lower across the board. Europe's biggest cities clamping down to curb the coronavirus, adding to concern that further restrictions could cause more economic damage. Ricardo Salinas Pliego, the head of Grupo Salinas and Latin America's 7th richest man, took to Twitter yesterday to confirm his COVID-19 diagnosis and said, quote, everyone will get the infection eventually. London and Paris, meanwhile, clamping down on gatherings. France reporting a record 30,621 new positive test results. FDA Commissioner Stephen Hahn says a series of trial stops involving Eli Lilly, Johnson & Johnson, AstraZeneca are all a part of the system to make sure that any COVID-19 vaccine or therapy will ultimately be safe. Dr. William Moss is executive director of the Johns Hopkins International Vaccine Access Center, and on Bloomberg Television this morning, he talked about the coronavirus vaccine development process.
We're looking to compare how many people get COVID and those who get the vaccine, and how many people get COVID who don't get the study vaccine. And in a pandemic, because there are a lot of cases, this can happen much more quickly than outside a pandemic. So this whole process of vaccine development can be accelerated and done, and really be done safely as well.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Peloton Interactive has been sued for patent infringement by Icon Health and Fitness. That's the maker of the Nordic track bike, escalating the legal tussle between the two fitness equipment giants. Shares up by 2.8%. Fiat Chrysler has agreed to invest as much as $1.1 billion in one of its 2 assembly plants in Canada, all part of a tentative agreement reached with more than 9,000 local auto workers. Fiat Chrysler shares tumbling now by just about 1.4%. Recapping, stocks lower. S&P down now by 10, down 0.3%. I'm Charlie Pellet. That's the Bloomberg Business Flash.
All right, Charlie, appreciate that update. You're listening to Bloomberg Business Week. Carol Master along with Paul Sweeney on this Thursday. A lot of headlines when it comes to the virus. We've got more curbs imposed because of COVID over in the UK, France as well. European nations are seeing record increases in new infections, so we're dealing with that. We're also seeing, though, some better news maybe in New York City, a leveling off of infections in some of those hot spots, but that's not the case if you take a look at a city like Houston. They are dealing with some troubling numbers. So let's bring in our own Michelle Cortez, because she is Bloomberg News health science and medical technology reporter, and she joins us on the phone from Minneapolis. Michelle, always good to check in with you and just kind of see where we are. So among the headlines, you know, when it comes to COVID, whether it's the vaccine, treatments, just the rising numbers, and then let's not forget that we're also seeing the Harris campaign specifically, now deal with an outbreak. What is it that's catching your attention that you think everybody needs to kind of sit up and take notice about?
The number of infections is on the rise in Europe and some other places. We are hitting record levels for the pandemic. We always did know that this winter was going to be more difficult, but it's not yet winter, right? I mean, we're only in the middle of October. So the idea that we are starting to see some really troubling things at a time when we should have learned some of our lessons in terms of how to behave individually to reduce the risk, and that we're seeing it now when there is still the option of being outside as opposed to inside, keeping your distance, wearing a mask, and we're seeing these rising numbers. I think that's very worrisome.
Michelle, I guess the question is, as I look at those numbers coming out of Europe and other places, again, yes, we did expect some type of second wave. Is it just simply behavior issues, or is there potentially a new virus out there? I mean, a new strain of the virus, or is it just behavior?
So, that's the terrifying question, right?
Yeah.
That is very, very worrisome. I don't even want you to say that. Don't jinx anything, for heaven's sake. But that's the concern. I think that if that was actually happening, we would be seeing even much more dramatic numbers than we're seeing now. And I certainly hope that that's not the case. I have not heard anything about that. So, yeah, so I hope that. Yeah, fingers crossed. The things to remember is that it's not just our individual behavior. This is a respiratory virus. Respiratory to circulate easier in dry, cold not air conditioning, but air conditioned, right? Where there's less moisture in the air so that the viral particles can spread. They can basically loft a little bit longer in the air and go from one person to another. So all of those things are conspiring against us right now. The thing is that it's so early days.
Yeah. Well, listen, Michelle, you know this. You've been reporting for Bloomberg, day in and day out, watching all of the developments. What are your expectations for as it starts to get even colder here? It's interesting to see New York kind of leveling off, and I do feel like this is a city that understands, here's what we need to do, folks. And I feel like everybody's getting used to wearing masks, and we get it, right? Some of us have been back to work, and we understand this social distancing thing, and we don't even think twice about it. But I do wonder what your expectations are.
It's really interesting if you look at the numbers on Bloomberg.com. We have a really great map that you can look at individual states and see what's happening with the trends. And it really seems to me that the states that were hard hit early do seem to have come down and have kept things down. The increasing numbers that we're seeing in the U.S. and perhaps across Europe, there's not as good of mapping data that I've seen out of there with these kind of great tracking numbers. The places that have just continually risen, certainly we're seeing some of it in the Midwest and the Dakotas, that kind of stuff.
Right.
They're just on an upward trajectory. So they haven't yet basically embraced the suck, so to speak, right? You guys know how it's going to be in New York, and you've reined it in. In other places, that's not yet happened. And hopefully we do get there. The other piece of it is that in New York, it was so intense.
Yeah, exactly.
In March and April. Now it seems like it's worse. The numbers are much higher, but it's spread out across an entire country as opposed to, Manhattan and Brooklyn and Queens and the Bronx.
Well, fingers crossed. Everything's crossed right now because we really hope it doesn't go back. Michelle, thank you so much. You're always keeping us up to date and just making us smarter. Michelle Cortez, Bloomberg News health science and medical technology reporter on the phone from Minneapolis. All right, over to World and National News with Nancy Lyons in our 99.1 newsroom in Washington. Hey, Nance.
Hey, Carol. Democratic Vice Presidential nominee Kamala Harris has been sidelined after her communications director and a member of her flight crew tested positive for COVID-19. The Biden campaign says Harris was not in close contact with either in the days before they tested positive, but she is going to hold off on traveling until Monday. More than 25 states are seeing an increase in COVID-19 deaths, and that's prompting a warning from the nation's top infectious disease expert, Dr. Anthony Fauci. He tells ABC's Good Morning America, we all need to rethink our usual Thanksgiving plans and hold off on gatherings.
When you have people coming in from out of town who may have been on airplanes in airports to just come into the house, if you have vulnerable people, the elderly or people with underlying conditions, you better consider whether you want to do that.
He says we need to double down on fundamental public health measures that he says can make a difference. Senate Majority Leader Mitch McConnell is criticizing Democrats for their $2.2 trillion stimulus plan that he says includes tax breaks for folks in New York and California. He says his plan is better.
What I'll put on the floor is a highly targeted $500 billion. That's a lot of money. A $500 billion program to target the actual needs that the country has.
McConnell plans a floor vote on his plan next week. Well, the show must go on even during a pandemic. The Tony Awards have announced nominations for 2020, even with theaters closed since March, and the musical Jagged Little Pill leads nominations with 15. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Paul Sweeney, Carol Masser. This is another story that's trending high on the Bloomberg, and it has to do, Paul, with a top city banker. We're talking about Ray McGuire looking to leave city to pursue a mayoral run in New York City.
Yes, this is interesting. This is starting to really heat up, Carol. But Ray McGuire, African-American, one of the top African-Americans in the financial services business in Wall Street, a senior executive at Citigroup. This is a tremendous commitment from Ray McGuire to leave, again, the role he's in now, which is such a senior role at one of the world's biggest investment banks, to go and run for the Democratic nomination for the mayor of New York City. So big news on Wall Street, big news in City Hall as well.
Yeah, exactly. Not the first time that we've seen someone from the Wall Street community or financial community, certainly run for to run a city, and we've certainly seen it here with Michael Bloomberg, of course, the owner of Bloomberg LP in New York City. But it is interesting, and, he's someone who, at a recent Economic Club of New York event, I think this was in June, he said, "Service is an important and necessary part of my journey, and it should be an important and necessary part of all of our journeys. Wherever I think I can be best and most highly effective, that's the path that I will follow." And I think there are some that, would agree that maybe this would be, a really good move for the city. I mean, the financial industry is certainly a big component of it, but it's a city that has definitely seen its ups and downs and is coming off, a crisis. And I think, thinking about the economy going forward, this might be what, would certainly some would consider kind of a good fit.
Yeah, I mean, I think, a lot of people feel like the city's really been dealt a serious, significant blow that's going to take maybe new leadership, new vision to try to dig us out of whatever hole we, as New York City folks, find ourselves in. So perhaps this is the time for change, maybe radical change, maybe new ideas, and that's perhaps is what Ray McGuire can kind of push forward.
Yeah, interesting. Some more when it comes to politics here. All right.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down Thursday, S&P dropping for a third day. It has paired losses as financial companies rebound from a two-day sell-off amid stronger than expected results from Morgan Stanley. Morgan Stanley shares, they're advancing now by 0.8%. The S&P is down 16. That is a drop of 0.5%. Have been down as many as 47 points, down 1.4%. The Dow narrowing its loss to 65 points now, down 0.2%. Nasdaq is down 111 points, down 0.9%. 10-year yield 0.72%. We've got gold up 0.2%, 19.05 the ounce, and West Texas Intermediate crude down 0.4%, $40.87 a barrel. Again, recapping equities lower here with the S&P down 16, lower now by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this is definitely a true Business Week story about the motorcycle industry, right? Which I think most of us, Paul, we would normally think about Harley.
Yeah.
But this one is about an Indian-made motorcycle with a retro look that is coming after Harley big time. So let's get into it with Bloomberg News reporter Ari Alstetter. He's on the phone in Toronto, along with Bloomberg Business Week editor Joel Weber on the line from Massachusetts. This is a really fun story. Interesting story, Paul.
Yes, it is. It's really cool. It's I'm not a big motorcycle person, but I love just kind of the look and feel of some of those.
All right, Joel.
Well, yeah, you're Paul. Paul, you are not the target audience.
I know.
For this
Ouch.
Ouch. That is sort of the point of the story, and what Ari came to us with is like, look, like we've written about Harley's predicament before. This is a company that makes these iconic Americana bikes and has this real dilemma, which is an aging demographic. That's not buying more bikes and probably buying even fewer of them in the years ahead. And Harley specifically has really struggled to sort of tack to a younger audience that's not buying bikes. And that's what caught our attention with Ari's story when he came to us with this pitch about Royal Enfield, which a lot of people might actually remember. Like, that was a British bicycle brand once upon a time. And now it's in the motorcycle game. They've got these retro-looking, really stylish bikes that are about the third of the cost of Harley. They've caught on in India and Southeast Asia, and now they're sort of eyeing this global expansion. And all of those things sort of made us go, there's a story to be told here. Arlie, who's behind this, and what's the vision that they see?
Right. Well, the entrepreneur behind this is a guy named Siddhartha Lal, and he is the third generation scion of this business family based in Delhi, and his father actually bought the Royal Enfield brand, which is it was the Indian unit of what was originally the British motorcycle manufacturer. That was a big deal in British motorcycling around the 1960s. But the British company went under. The Indian one just kept on trucking along until it went into trouble when Siddhartha Lal's father bought it, tried to turn it around. And then Siddhartha took over, and he really turned it into a cool thing for millennials, for young people. He spent the last 20 years kind of retooling the bikes, making them easier to ride, chucking out the old cast iron engine that had been shuddering along on these bikes since the Second World War, putting in a newer aluminum engine that wasn't so prone to breaking down, but keeping the look, that sort of cool post-war Steve McQueen look of the bikes. And, just like millennials everywhere, heritage brands, retro brands really appealed to millennials in India, and they've really taken off.
So, Ari, I'm glad you mentioned Steve McQueen, because when I saw the bike, it just reminded me of that movie, The Great Escape, and you had Steve McQueen riding this bike trying to escape the Germans. It's a really, really cool look here. The price tag also is interesting to me, roughly a third the cost of a Harley Davidson. So are they really thinking about the U.S. market?
Yeah, well, I mean, that's actually what they expect to be their main selling point in the U.S. market. That, you know, you'll get a bike with character, with heritage. It's all metal. They call it a naked bike. These kind of bikes are called naked bikes because they don't have all the plexiglass or whatever coverings that Japanese bikes like Kawasaki might have. You just see the steel, the aluminum. You see the motor. You see the gas tank, but you get it for a third of the price of Harley or a third of the price of Indian. And I think that is sort of the advantage they see here because they're producing for their home market, India, which is the largest motorcycle market in the world. They're producing at such scale that they can offer these bikes at a lower cost. And the thinking is that, you know, maybe that might be an easier entry point for a cash-strapped millennial who might want to get out of the city on the weekend than a $15,000 Harley.
And, you know, the pandemic certainly, all of us are looking for personal escape pods, I think, Ari. The other thing, though, that you hint at here, which is regardless of sort of how much market share they could potentially acquire in the U.S., even just the fact that Americans would ride a bike made in India will probably be able to, like, sort of boost the international appeal in places like Southeast Asia. Can you talk more about like what the rationale there is?
And can I just add to that? There's one well-known American, Jay Leno, who already likes it.
Oh, that's right. Yeah, no, he had the Royal Enfield's two new bikes, the Interceptor and the Continental, on his sort of YouTube show where he reviews automotive products, and he really liked it. And actually, it's an interesting point you bring up, Joel, about the the sort of business strategy here, because can Royal Enfield, bring motorcycling back to what it was and have millennials riding at the same rate that boomers did? I mean, Royal Enfield would say probably not, or at least we don't know. But they're coming from a baseline of zero in the U.S., a baseline or nearly zero in the U.S., or very low in Europe. And so every one of those bikes, one, for them, that they manage to sell in the U.S. or Europe, it's a very high margin product for them. So a bit better margins than they're getting in India. So it's helpful from that point of view. But then also it increases the brand cachet in India. It increases the brand cachet in Thailand or Brazil, because this is a product that suddenly Westerners like. So in Royal Enfield's latest results, they made a point of saying in the last year, one of those new bikes, the Interceptor, was the top-selling middleweight motorcycle in the UK. Now, is that necessarily a lot of motorcycles? Maybe not, but that will really matter to a consumer in India, because suddenly it has this cachet, it has this sign of sort of foreign success around it, and that'll help.
I'm just going to say it is a really fun read, and the story kicks off with talking about this one biker club in India. And like, you think bikers, right, Paul? And you think, all right, we're going on a ride, and then we're going to stop at a bar.
Right.
And these guys actually go to a juice factory.
Right.
Where they've got punch, and they've got ice cream sundaes, and cocktail liqueurs. So it's a little bit of a different feel, but we talk about disruption, and they definitely, have an opportunity to really change.
And it's been an issue for Harley Davidson to try to attract that younger crowd. They've not been able to do it. They're trying. They're trying.
Right. And you've got a lot of older folks who are saying, okay, I'm done with my motorcycle riding days.
Yep.
So it really puts a squeeze on them. All right, great story, of course, from Ari Alstetter. He is reporter at Bloomberg News on the phone from Toronto. Check it out at Bloomberg.com. I'll put it out on Twitter as well. And Joel Weber, of course, our editor at Bloomberg Business Week on the remote access from Massachusetts. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to come right back. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. And coming up next, Paul, we're going to dig a little bit deeper. Once again, stimulus, the economy. Feel like I'm a broken record.
And the election, we've got a couple town halls this evening.
Yeah, exactly. Yeah, just a little bit going on. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hours of trading with a developing story. Almost 2,000 Robinhood Markets accounts were compromised in that recent hacking spree that siphoned off customer funds. It is a sign that the attacks were more widespread than was previously known. A person with knowledge of an internal review who asked not to be identified because the findings are not public provided that estimated number. You'll recall when Bloomberg first reported on the hacking spree last week, the popular online brokerage disclosed few details. It is a down day on Wall Street. Stocks, though, have pared losses as traders await news on negotiations over a fresh round of stimulus amid a resurgence in coronavirus cases around the globe. Right now, we have got the S&P 500 index trading lower. Right now, the S&P is down 10. That is a drop of 0.3%. At the worst level, the S&P had been down 47, declining by 1.4%. The Dow is down 23 points, down 0.1%. Nasdaq down 86, a drop there of 0.7%. 10-year down 2/30 seconds with a yield of 0.73%. Well, as for that potential uptick in coronavirus cases and what it could mean for the U.S. economy, Lindsay Piegza is chief U.S. economist at Stifel.
If we see a resurgence in the virus as weather turns cold in the fall and towards the end of the year into the winter, it's very likely that we will see further restrictions or further safety measures imposed here in the U.S., which will very quickly dampen the modest recovery that we've seen in the third quarter.
Morgan Stanley shares higher, rounding out a winning week. Wall Street trading desk with its own success story. Revenue from the business surged 22% in the third quarter, lifting the firm's profit to the second highest ever. Right now, we are looking at Robinhood shares of Morgan Stanley. They're up by 1.2%. Airline stocks, they are slumping. United Airlines, after earnings, leading the way lower. UAL down by 3.5% among some of the other airlines. American down 0.6%. Delta down 1.4%. Southwest down by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser on Bloomberg Radio.
All right. Well, the stimulus saga continues. I'm Carol Master along with Paul Sweeney. You know, Paul, I was just checking on the Bloomberg to see if there's anything new out because I believe Nancy Pelosi was meeting or at least having another call with Treasury Secretary Steven Mnuchin today. We know the Democrats want a $2.2 trillion plan. The president said, came out, right, and said he would maybe be okay with a plan in excess of $1.8 trillion. I mean, it goes back and forth.
There was a great headline earlier today on the terminal which captures it all, which is President Trump pushes for stimulus. McConnell says no. And there you go.
Well, that to me is just shocking that the Republicans are pushing back at their own president. You're right. So you're right. It says
it's
it all.
2020.
It's 2020. It's politics 2020. That's for sure. Well, listen, all of this is happening as the U.S. economy continues to send reminders that all is not well. We talked about that at the top of the show. In today's Business Week Economics, Simona Makuta is senior economist at State Street Global Advisors, joining us on the firm from Massachusetts. The firm, by the way, has over $3 trillion in assets under management. Simona, good to have you here with us. How, as an economist, do you watch these stimulus headlines? How do you kind of work them in, if at all at this point, into your projections about the economy?
Well, the one thing I will say I do, and I would advise others to do as well, is to try not to watch these minute by minute because things are really changing. And just take a step back and ask two questions. How much stimulus do we need and how quickly do we need it? And I think on the first question of how much, I would argue that probably we don't need the 2.2 trillion and probably not even the 1.8. And it's true that the economy is not running on all cylinders, but frankly, as I look at where is aid needed most, I would certainly point to the airline sectors before I would point to state and local government, perhaps. So I think there are really things that are more necessary than others and more urgent than others, but not the whole 2 trillion is needed right now.
Unless you're one of those 8 million that have slipped into poverty since May, as federal aid has dried up. I mean, for a lot of regular Americans, they're not in the headlines. The airlines may be, and I feel for that industry as well and those workers. But there's a lot of people who are not getting by, and they can't even put food on their table.
that is true, and I think what you're pointing out is exactly the difference in what this new round of stimulus needs to deliver versus what the first round did, which is the first one was, blanket, cover everybody because you just don't have time to really assess who is in most dire need. I think the point now is that, how can we identify where the need is greatest? And you are right, there are many millions. We have about 4 million people who are permanently unemployed, no longer even, on the temporarily unemployed. I would argue they are the ones who definitely need help soon, now, versus, does anybody who receives the $1,200 check in the first round, do they still need it today? I mean, it would be nice perhaps to have it, but it's not the same degree of need and urgency. So it's troublesome that we cannot seem to agree and at least sign off on the things that the bits of the stimulus that are most urgently needed, even as you try to assess the other parts.
Yeah, it's interesting, Simona. We had another jobless claims number out today, which is something we here at Bloomberg Radio and TV focus on as certainly a high frequency data point, and boy, stubbornly high on those jobless claims here. How concerned are you that some of this is, I'm not going to say permanent, but it's this jobless situation here is not something that's going to snap back anytime soon or with any velocity. Are you concerned about that as we go forward?
Of course I'm concerned, and I don't think there is anybody who watches the economy and the labor market who would not, wish for those initial claims to come down much faster.
I mean, the longer they don't come down, I mean, it's more problematic, right, in terms of getting them back to work?
Exactly. But there is also some confusing details on the initial claim. So, I mean, it's increasingly tricky because now you're in this period where some of the benefits are lapsing for the early people who started. So on one hand, you have the initial claims still very high, continuing claims are declining, but you have to wonder, are they declining because all those people are going back to work, or are they losing benefits? The good thing, and I think the one encouraging thing, is that a lot of the people on furlough previously, they used to be 17 million, now they're about 6. So we are making progress, but as I've said many times, it's easier to get from 15% unemployment to 8. It will be much harder to get from 8 to 4.
So, Simona, that's the consumer side of the equation, the 70% of the economy. Are people back to work? Are they spending money? How about the manufacturing side of the economy? That seems to be seeing some green shoots, if not a little bit more.
Yes, and that's certainly in the data that we got today from the Philly Fed. I would say that's one sector where I look for continued momentum and improvement. In a way, it's tricky. It's funny to say, but if you look at the retail sales relative to where you are at the beginning of the year, you've made the full recovery. Industrial production has not yet, but I think there is more solid momentum in the pipeline there for additional gains. And you've seen that in the new orders, you've seen it in shipments. And the way I think about it, the earlier gains in industrial production, not just in the States, but elsewhere, have really been the result of that particular economy reopening. Now I think you're increasingly starting to get the benefits of the global supply chain coming back fully, or as close to full as possible. So I think the manufacturing sector is actually in a better shape going into the next 3-4 months. There's an inventory cycle that also will propel manufacturing production.
Simona, just got 30 seconds here. I mean, what is it that worries you most about the economy right now, and that we may not be spending enough time on, and that may be the story of 2021? Just quickly.
I think the people who are falling under the radar, as you've mentioned, it's hard to count, right? I think it's those most vulnerable people that are difficult to identify in statistics. And how do you reach them? Going forward, I worry that at some point, even if this round of stimulus eventually will come, but what happens after that, right? At some point, the stimulus has to be reined in, and will the economy be able to fully compensate?
Yeah, we need to think about that and certainly have the plans in place. Simona, thank you so much. Simona Makuta, she is senior economist at State Street Global Advisors, joining us on the phone from Massachusetts. And it's Paul, constantly that disconnect between kind of Wall Street and Main Street, right?
Absolutely.
That we continue to see. All right, let's get a check on world and national news. For that, it's over to Nancy Lyons in her 99.1 newsroom in D.C. Hey, Nancy.
Hey, Carol. Federal prosecutors have unsealed an indictment accusing Houston-based technology executive Robert Brockman of hiding $2 billion from the IRS and defrauding investors in debt securities. U.S. Attorney David Anderson says Brockman used a family charitable trust based in Bermuda to hide his assets.
The allegation of a $2 billion tax fraud is the largest ever tax charge against an individual in the United States.
The indictment charges Brockman conspired over 2 decades to secretly maintain complete control over trust assets while failing to pay capital gains and income taxes. The candidates for president will not be participating in a debate tonight, but there will be town halls, 2 of them. Bloomberg's Amy Morris reports from Washington.
The 2 events, with President Trump on NBC and Biden on ABC, threaten to fracture viewership, making it harder for the candidates to deliver their messages to a broad audience. It could still be one of the highest profile opportunities before the November 3rd election for the president to reverse his slide in the polls. Instead of sparring with each other, the town hall format gives each candidate a chance to lay out his position and engage one-on-one with voters. Both town halls air tonight at 8 Wall Street time. In Washington, I'm Amy Morris, Bloomberg Radio.
Grassroots donors in the third quarter poured a massive $1.5 billion through Act Blue, the fundraising platform for Democratic candidates and causes. The group says that's nearly equal to the amount of money donated through Act Blue in the entire 2018 election cycle. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. I have to say, Paul Sweetie, God, if I am on the Bloomberg, but for anybody who's on the Bloomberg right now, I probably wouldn't be getting any work done because I would just be kind of glued to most read because it's just story after story popping up. This one, Robinhood, we all love talking about Robinhood. And we know almost, we've talked about the hacking, right? That got into a bunch of accounts. Well, almost 2,000 Robinhood Markets accounts were compromised in a recent hacking spree that siphoned off customer funds. And it's a sign that the attacks were more widespread than was previously known. It's the number we're kind of really zeroing in on here. This is a Bloomberg exclusive, by the way, by Sophie Alexander.
Yeah, and we've seen this Robinhood platform, this Robinhood market just explode really during the pandemic. A lot of folks said, you know, hey, if I can't go to a casino or I can't bet on sports, let me bet on the stock market, open up an account. And there's been a whole bunch of Twitter feeds and little celebrities kind of posting their work and their trades across social media. So it's really exploded in popularity. And I guess in the world we live in today in terms of cybersecurity, we shouldn't be that shocked that some of these accounts were at risk of being hacked.
But listen, you're someone who understands the investment environment. Like if you have this investment account, right, and it gets hacked, it's like one of your, one of these nightmares that you hope never happens, basically.
No, exactly right. And again, it's just exploded in popularity that, we'll have to see how it plays out. But I mean, this is a brand new kind of platform relative to, some of these traditional brokerage firms that have been in the business of managing accounts and money and maybe have better security protocols around there. Who knows? We're going to have to see how this plays out over the next several days. But 2,000 accounts, that's a lot more than I think the company initially was suggesting.
Right. I think it was a limited number of accounts initially when the reports came out. I'm guessing we're going to talk with the CEO and one of the co-founders of Wealthfront, which
that'll be good.
is a disruptor of fintech, right? They did this a few years ago at this point, but I'm sure that he'll have something to say about security and Robinhood. It'll be interesting to see and get his perspective on this in terms of, I don't know, where it's going, how it's impacting their business, and what they think about it. All right, you're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A bounce back for the U.S. stock market, still lower across the board with the Dow, the S&P, NASDAQ all in the red. But let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
And good afternoon, Charlie. Stocks are in the red, though they're paring their losses after a choppy session as traders await news around stimulus talks. The Dow is down 25 points, S&P lower by less than 10, and the NASDAQ is off 65 points. The U.S. 10-year yield is little changed at 0.73%, and small caps are higher by 12. 6 of the 11 main S&P sectors are trading higher, led by gains in real estate, energy, and financials, while communications and healthcare led to the downside. NASDAQ Biotechs fell 2.2%, transports gained 70 points, semis dropped 13, while the VIX is higher by 2.5%. Leaders in the Dow, Walgreens Boots, United Health, and JP Morgan, while Salesforce, Merck, and Goldman Sachs were the worst performers. On the earnings front, Morgan Stanley's trading division beat quarterly estimates. Walgreens rallied the most since May after stronger than expected sales, and Schwab's third quarter earnings topped analyst forecasts. In the biotech space, Vertex Pharma fell the most since 2012 after stopping a key drug study. And wrapping things up, look for earnings from Intuitive Surgical after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
All right, I thank you very much, Bailey. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Paul Sweeney, and we know there's so much going on the campaign trail, and certainly someone who's keeping track of it is our own Bloomberg News political reporter, Ryan Teague Beckwith, on the phone from Washington, D.C. And God, Ryan, we're, 18 days away from the election. It's like hard to believe.
Yeah, but about 60 days from when the Electoral College meets, which is when I will finally believe that this is all over.
Good point.
A few more days after that until January 6th when they actually count the votes in Congress. And then January 21st is about less than 100 days away.
But wait, there's so much early voting going on. My family has been, who are all around the country, and I've got a large family, they've been all like sending me pictures. Look, we voted already. We voted already. I mean, won't that help things out a little bit?
Yeah, actually, there's been a couple surprises. I mean, I think earlier in the summer, there was some concern that we were going to have, weeks. It was going to take forever to process these mail-in ballots. There are still concerns about how mail-in ballots in particular are going to be processed with those that come in late and that sort of thing. But several states have gotten their acts together and are processing these now. I think that we may get an early answer on election night as to who won if a couple of states go a certain way. We're still going to have to wait probably on Michigan and Wisconsin and Pennsylvania. But if it doesn't come down to those three, then I think it will be pretty apparent really quickly because both Arizona and Florida are going to have really fast results.
Yeah, Ryan, I just want to follow up on that early sending in the ballots. I don't remember it being such a big story in past elections. Are more states doing it now? Are more people voting now? Is this really different from what we've seen in past cycles?
Yeah, so all but a handful of states allowed no excuse absentee voting, as it's called, but it didn't really take off as much. There were certain groups of people, like senior citizens, who loved doing it, and it was always popular in states like Arizona and Florida, and obviously there was a couple of states out west, like Washington and Oregon, Colorado, which do their votes entirely that way. Yeah, but this year, it was just brought into the consciousness so much that at the last time I checked today, we've had about 15 million votes cast already by mail or in early voting. At this time in 2016, 1 million votes have been cast.
There we go. That's the takeaway.
God, that's huge.
Yeah, it's a huge, and it's just entirely from people who, early in the pandemic said, I'm going to vote by mail. I got to request this now, and jumped right on it. I mean, that's those people, once they got into the system and they've gotten processed, they've gotten their ballots in the mail. As you said, they're returning them, and it's really popular right now among Democrats.
And listen, I hate to go here because I feel like, I don't know, there's been so much questioning about, can we trust the early vote? Can we trust the mail-in vote? What are you hearing on this front in terms of security surrounding all of that?
Do you mean like, is there fraud or that sort of thing?
Yeah, because
Go ahead.
No, I'm just saying, we've got a president who I feel like, is constantly kind of injecting into the discussion, the political discussion, and certainly the election discussion about whether or not we're going to be able to trust the outcome.
Yeah. Well, I mean, look, trust is not something that you can just make people have.
Yeah.
Obviously, there have always been safeguards around vote by mail. There is a minuscule rate of fraud that has been found in study after study. Even the Heritage Foundation, which maintains a comprehensive database, got like a couple hundred examples out of the millions of mail-in votes that have been cast since 2000. So that's just not a thing. But him saying this a lot obviously will undermine it. And I see this in my Twitter mentions all day long from supporters of the president who just flat out refuse to believe it. But here's the thing. In all of the lawsuits, and like I said, there's like 250 some lawsuits right now in like 40 plus states. In all those lawsuits, when judges have said, okay, show me evidence of this claim of fraud that you're making, they haven't been able to prove it. And those cases are getting dismissed. And so if your concern is, if you're not a supporter of the president, and your concern is that this argument is somehow going to sway the election, it may sway people's perceptions of the election. But, in a courtroom, there are standards. And there's just not going to be, if there is something that happens in a courtroom that affects the election, it would be more like a judge saying, no, we're not going to count these ballots that came in past a certain date or something like that, not these baseless claims of fraud that we've repeatedly heard.
So, Ryan, real quickly, about 20, 30 seconds, should I watch any of these town halls tonight, or can I just watch Thursday Night Football?
I mean, they're not going to be debating each other directly. It feels like a nightmare for anyone who's not being paid to watch this. I mean, it's an hour on one and 90 minutes on the other. That's a lot of your time to watch. I think I would just check out like YouTube or like broadcast news the next day, tune into Bloomberg Radio tomorrow, and listen to the highlights. I can't imagine that this is worth your time.
But you will be watching, right?
I'm being paid to watch.
That's right. There was
my job. I mean, it's economics here, but yeah.
Well, I've just been told that Thursday Night Football is moved to Monday, so now I have no excuse.
There's always cat videos. I'm just going to put it out there. Hey, Ryan Teague Beckwith, you're the best political reporter at Bloomberg News on the phone from Washington, D.C. Check out the Bloomberg terminal and Bloomberg.com because he's constantly updating the news from the campaign trail. It's really a must read. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
1130.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everyone. This is Bloomberg Business Week. Carol Masser along with Paul Sweeney. Coming up, Paul, it's time for Chart of the Day.
We'll see what Dave has for us today, and perhaps a song.
Yeah, he better have a song. I count on it. It's what kind of recharges me at this point of the game. All right, let's get back to your top business stories and another check on the trading day. Just a little under a half an hour to go here, Charlie.
Indeed. It's going to be an exciting finish. I'll tell you why. Moments ago, the Dow Jones Industrial Average just turned positive, up now by 3 points. Significant because at the low of the day, the Dow had been down 332 points, down 1.2%. Right now, little change with the Dow up 5. That's a gain of less than 0.1%. Yes, virtually flat, but green on the screen nonetheless. The S&P remains lower by 2 points, have been down 47. S&P down 0.1%. NASDAQ down 39 points now. That is a drop for the NASDAQ Composite Index of about 0.4%. 10-year yield 0.73%. Gold up 0.3%, 19.07 the ounce. West Texas Intermediate crude down 0.1%, now at $40.99 a barrel. So the S&P 500 index coming off session lows as Morgan Stanley paced gains in financial companies after stronger than estimated results. Energy producers rallying. Morgan Stanley shares are up now by about 1.4%. Almost 2,000 Robinhood Markets accounts were compromised in a recent hacking spree that siphoned off customer funds. It's a sign that the attacks were more widespread than was previously known. Starbucks has released more details about the makeup of its U.S. workforce and will link executive compensation to diversity targets. Starbucks shares are down by 0.8%. A moment ago, we learned that PepsiCo is pledging that 10% of its managers will be Hispanic by the year 2025. PepsiCo shares trading lower by 0.7%. 3:33 on Wall Street. Time now for the Small Business Report with John Tucker.
The Berkshire Eagle in western Massachusetts is a local newspaper that traces its roots back to 1789. The Eagle and its two sister papers were already facing challenges when the pandemic hit. Fred Rutberg and his partners bought the papers in 2016, and Fred now serves as publisher. Fred, can you tell us about the challenges that you guys have been facing?
And we're very proud of what we've done. We've won some awards along the way. But frankly, the economics of the business are, as you know, very, very difficult.
COVID hit around March, and then it really began to take hold in April. We realized just how difficult it was. What did that do to revenues at the papers?
We lost almost $2 million worth of advertising between the middle of March and the end of August. And it's continued through September. So it's over $2 million if you figure September, comparing year over year.
How do you pivot in a situation like that?
Well, it's very difficult. Fortunately, we did receive a PPP loan, which kept us alive. But then our board got together and challenged us and said, look, we don't want you to cut. You can't cut your way to success. So let's just look at this from like a zero-based approach. And where are we going and what can we do? We realized that one of the upsides of COVID is that our circulation has increased, our readership has increased, at least especially on the digital-only side. From a revenue point of view, it doesn't have the same impact as if you were to increase the print circulation that much, but it shows you that's where the future is. It showed me two things. First, that the public wants reliable, important local information, and they're willing to pay for it. And secondly, there's where our future lies.
All right, Fred, we'll leave it there. Fred Rutberg, publisher of the Berkshire Eagle, and that's your Bloomberg Small Business Report.
And we thank you very much, John Tucker. Recapping here, stocks turn around. The Dow up 3, little changed. S&P down 2 points, a drop of 0.1%. NASDAQ down 0.3. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg. You know, Dave Wilson, I think you're going soft in your old age. I don't know what it is, because I feel like often I can't figure out the song, and I'm fairly fluent in music, but I feel like you're doing some softballs here, buddy.
Okay, so the song and the artist, please.
Well, it's Beach Boys, right?
Right.
And
I got that far.
well, wasn't this? I forgot, but wasn't it just the line? What was the song? Was it I don't know. Can you play it again? Can we get a few bars? Hello?
You gotta listen for the chorus, Carol. That's all I can say.
Oh, you mean, so did we miss it?
You did.
Well, that's a bummer. You got to cue our team and tell them, listen, we got to hear the chorus.
You've been doing this for long enough.
Oh,
You
wait.
shouldn't need any cues. by
Here it
now.
is.
Oh, yeah.
Was it good timing?
Good timing.
Timing.
Yeah.
Yep,
That's
good
it.
timing. That's a good tune. Good one.
I like it. All right.
Absolutely. A late 70s hit from the Beach Boys. And I bring that up because, in terms of what investors have favored in U.S. stocks and what they've gone against, it's a matter of timing when it comes to earnings growth. And there was a report out yesterday from Jonathan Golub, the chief U.S. equity strategist at Credit Suisse, that showed as much. What he did is he went through the Russell 1000 growth and value indexes. So, they're pretty popular gauges with institutional investors. And looked at earnings estimates and broke companies into three groups. Those that are expected to have higher earnings this year than they did last year, those that are going to have to wait to 2021 to do that, and those that may not get there for a while, certainly not in the next 2 years. And when you run the numbers in terms of year-to-date performance for the groups that result from this breakdown, you find out it's all about earnings and how quickly companies can deliver growth. Here are the extremes.
David, it's like shocking. It's all about earnings, but go ahead.
Well, all right, it's not shocking, but to see how stark the contrast is, that's pretty shocking. Let's just take the growth index. We know growth stocks have been in favor this year. Okay, year-to-date performance of Russell 1000 growth companies expected to have higher earnings this year, up 44% as a group.
Mm-hmm.
If you look at the companies where earnings aren't expected to be higher than they were last year until after 2021, you're talking a 3% decline. And same way with the value index, although the moves aren't quite as extreme in either case because, let's face it, growth has been a real focus for investors. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
My head hurts with that one. Is there a takeaway? I love you, Dave, but what's the takeaway here then?
The takeaway is that, if you're waiting for earnings to come around, and certainly you're doing that if you're in value stocks, as we talked about with yesterday's chart, you're paying a price.
Yeah, well, that's for sure.
I just think, I don't know what's going to get people off of this big cap, top line growth story. Boy, not with this economic data that we're seeing.
Well, it's a story with some teeth in terms of these kinds of companies. It's not like they don't have a lot of revenues or they're not profitable. It's hard to kind of walk away from it, that's for sure. All right, Dave Wilson, a great song, a great chart. My head is now cleared. I now understand. So thank you, Dave Wilson. I know it kind of takes sometimes a village for that to happen. All right, Dave's going to come back later on. Let's get to world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Democratic Vice Presidential nominee Kamala Harris is changing her campaign travel plans after positive tests for COVID-19 from those within her campaign. Bloomberg's chief Washington correspondent Kevin Cirilli has more.
Two aides to Senator Harris that tested positive for COVID-19. Senator Harris has tested negative for COVID-19. She has halted all travel through Sunday. She'll be back on the campaign trail, according to her campaign, on Monday.
Neither infected person was in contact with presidential nominee Joe Biden, whose travel schedule will not be interrupted. Well, President Trump and Joe Biden will be competing for TV audiences in dueling town halls tonight instead of meeting for their second debate as originally planned. Instead, they'll take questions in different cities on different networks. Joe Biden on ABC from Philadelphia, President Trump on NBC from Miami. Trump took a swipe at NBC during a rally this afternoon in North Carolina.
I'm being set up tonight, right? So I'm doing this town hall with Concast, C-O-N, right? Con, because it's a con job, Concast, C-O-N, not C-O-M, C-O-N, cast.
YouTube is the latest social platform to ban videos that promote QAnon, and other conspiracy theories. In joining Facebook and taking action against the far-right movement, YouTube says it will only ban videos if they target specific people or groups. Federal prosecutors have charged Texas billionaire Robert Brockman in a $2 billion tax fraud scheme that they say is the largest such case against an American. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Paul Sweeney, And a couple stories I wanted to mention, Paul, that are on the Bloomberg. We talked about it a little bit earlier about Wall Street set for its first 100 billion trading year in a decade. I mean, it's pretty staggering, right? It's been a crazy year, but yet traders, man, they love the volatility, right? And they can certainly make a lot of money off of it.
Yeah, they love the volatility generally. Sometimes you get an investment bank saying this wasn't good volatility, I don't know what good and bad volatility is. But kind of what jumped out at me is Wall Street didn't really miss a beat from this whole work at home thing, and it really is amazing because there was early on banks were saying, oh, some people are going to have to come in and trade. You can't do this from home. There's too much money. We have to be there for our clients. But the reality of it is, for the most part, these financial markets, these capital markets, are functioning quite well on a global scale. And again, $100 billion in trading revenue, the best in a decade, kind of just puts a number on it for you.
Yeah, absolutely. And it's interesting if you kind of juxtapose it against some of what we've heard from some of the leaders on Wall Street. I kind of keep going back to that story early, I don't know whether it was a month ago or whenever, but Jamie Dimon talking about some of course, at JP Morgan, about some of the younger workers and concerned about productivity. And yet, if you look at these numbers, they've actually, young or old, whoever the traders were, they've done well.
Yeah, they have. And, one of the points that I can't remember which CEO made it, but I think it's still a valid point, is we need to train these people. We need to really provide support for these people. And it's really hard to do that, to develop your talent when you're not together, when you're physically apart. And that may be a cost to companies and this economy to some extent down the line when we do all come back. So we'll have to see how that plays out.
That's a really good point, like in terms of developing and cultivating your bench, right? I mean, you might not see it today, but you might see it, next year or in 2 years if they're missing out at this point.
Yeah, I mean, I think, again, a lot of these, like any job, there's a steep learning curve on those early days.
All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ, they're all lower, but stocks bouncing back late in the day. The Dow had been fluctuating. Right now, it is down 19 points, a drop of less than 0.1%. At the worst level, the Dow was down 332, down 1.2%. S&P little change, down by about 0.1%, lower now by 5 points. NASDAQ down 47, a drop there of 0.4%. Stocks fluctuating as traders await news on negotiations over a fresh round of stimulus amid a resurgence in coronavirus cases around the globe. As for the 10-year, right now 0.73%. Gold up 0.3%, up $6 the ounce at $19.07. West Texas Intermediate crude down about 0.2%, down 7 cents a barrel now at $40.98. Recapping, S&P lower, down 6, a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it is time for the drive to the close. And back with us is someone who is certainly familiar to our audiences. We're talking about Walter Todd, Chief Investment Officer at Greenwood Capital Associates, on the phone from Greenwood, South Carolina. And Walter, it's good to have you back. I think we last talked in mid-July. How are you doing? How's South Carolina?
Hey, Carol. Good afternoon. Yeah, we're doing okay. We've got, like a lot of places, cases picking up a little bit here recently. And my son Blake was diagnosed a little while back, but is fully recovered and
good to
he's
hear.
back to college. So all good.
Yeah, that's the folks went back to college here. A lot of those kinds of stories. I have two in college myself at big colleges, so you just keep your fingers crossed there. Walter, it's also a big political day here today. Lots of news on the political front. We've got a couple of dueling town halls tonight from the two candidates. How are you telling your investors to kind of think about the election pre-post as they think about their portfolios?
Yeah, it's a tough question to answer. A lot of people are worked up about this election for a variety of different reasons, depending on which side you're coming from. But for us, I think the message is kind of hold the course here. You've seen the market kind of rally over the last 2 weeks in anticipation of maybe a more decisive election outcome. I think the concern a month ago was we might have a contested election. Doesn't seem to be the case at this point, but of course, 3 weeks to go, so anything can happen. So I think the big changes people like to talk about are really unlikely, regardless of the outcome, because it really goes down to the Senate and who controls that. And the reality is the control either way is going to be 1 or 2 seats. And so there's not going to be the flexibility to do a lot of dramatic changes. There'll certainly be policy differences between the two administrations for sure. But as far as making any big moves ahead of the election, we would not kind of advise that.
So I do wonder, too, our team over on Bloomberg TV caught up with the Morgan Stanley CFO, Jonathan, I think Pruzan, hopefully I'm saying it correctly, but he said a blue wave is priced into the market already. And so he said, judging by the market moves in the lead up to the vote, investors don't seem too spooked by the possibility. Are you in that camp? Do you kind of agree with that?
It seems to be, when you look at the performance, what's performed really over the past month as the polls have widened out, it certainly seems to reflect that. So you look at alternative energy, for example, has dramatically outperformed. Banks have underperformed, which would do better under a Republican regime. So when you look at kind of and parse it out and what's worked and what hasn't worked, it definitely seems to be pricing in more of a blue wave outcome at this point.
Walter, one of the things that we've all observed in the market recently is this push and pull between, the folks saying, I'm just going to stick with my big cap leveraged big cap tech names that worked so well for me. They've got great top line growth stories. I don't have to worry about too much because the growth is already there, whether it's an Amazon or an Apple. And the others are saying, hey, at some point we got to look to the other side of this pandemic. There will be economic expansion. I need to now begin to think about rotating into some of those more cyclical sectors. Where do you kind of fall out in that discussion?
Yeah, it's a great question. And just to kind of tie back into what Dave Wilson was talking about before I came on, kind of that growth versus value discussion, it's really a sector debate, right? And when you look at the Russell 1000 growth, it's a highly concentrated index. 20% of the index is in Apple and Microsoft. 63% of that index is in technology, communication services, and Amazon. So, yes, those have been the best performers. I think you want to continue to have exposure to those secular winners. But to your point, I do think you want to have a barbell approach and have some exposure to areas that are going to benefit from a normalization of the economy and continued reopening of the economy. May be lumpy. As we know, we might get more cases here in the winter. But you can look at that in all different sectors, not just what you think of as deep cyclicals like energy and materials, for example, but even in like healthcare, you can look at healthcare equipment names that have been hurt by the slowdown in elective surgeries, for example. They would benefit as that starts to normalize, for example. So I think there are a lot of areas outside of those headline-grabbing big cap tech names that are opportunities.
I do wonder, too, in terms of pent-up demand. I mean, obviously, you can't go and take a vacation that you couldn't take, earlier this year. You can't retake that in 2021. You certainly can take one, but you can't kind of add to what was lost. So I do wonder what will be the pent-up demand stories and cases that ultimately provide some investment opportunities, Walter, for individuals.
Yeah, well, we've seen some of that manifest itself, for example, in RVs right now.
Yeah,
people going camping and boats and so forth. But I
but
guess
that's substitution, right? That's
yeah.
It'll be interesting to see if it continues next year.
If you look at it a little bit further, hotels would probably be drivable hotels. So the ones that are closer to home, not in the big cities like Marriott, maybe like an extended stay or something of that nature. Plane or airlines, for example, I think are starting to see some of that, but they really are so reliant on that business travel, which United Airlines CEO said today he didn't see that normalize until 2024.
I saw that, yeah.
Yeah, which is amazing to think about. And so I do think some of those industries are going to really take some time to come back. But I would say probably hospitality is maybe one of those areas that you could see a catch-up trade in.
Hey, Walter, as you talk to your clients, what's the vibe you're getting for them? Are they really shook up and say, I really want to pull in the reins here on terms of risk? Or are they saying, I get this is bad, but it's temporary, and I can look to the other side? What's the kind of the feedback?
Yeah, so clients are really nervous about this election and the outcome and the impact to the market. So we're having a lot of conversations with clients about that. Beyond that, it's really talking about asset allocation, which is very difficult right now, given that the 10-year Treasury notes at 0.6%. How do you asset allocate? Traditional 60-40 is more challenging, so you got to get more creative when you're talking to clients about that. So those are a lot of discussions that we're having right now. But I would say in general, clients beyond the election outcome are generally feeling okay.
All right, we're going to leave it on that note. Hey, Walter, nice to check in with you. Walter Todd, he is Chief Investment Officer at Greenwood Capital Associates, joining us on the phone from Greenwood, South Carolina. So some interesting perspective. I do wonder, I think it's still hard to get a feel, Paul, about what 2021 looks like in terms of an investment year.
Yeah, it's going to be interesting. Is it in fact, all comes down to the vaccine would be my sense, vaccine / therapeutic. If you make enough improvement there, then maybe you can start making an economic turnaround call. If not, then maybe it could be a little bit more of a transition year for the economy and for the markets. But I think the expectation is we're going to get some good news next year. You just need to be well positioned for it.
But man, the airlines. Whoa,
yeah, 2024.
That is just mind blowing.
And that's their margin. That's their profit margin.
Yeah, exactly. You wonder what that means in terms of continued fallout from that industry. Stick around. Here comes the close.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell clanging at the New York Stock Exchange as we wrap up trading on this Thursday, October 15th. Folks from 3M virtually ringing that closing bell. In the end, a move lower. Stocks did fluctuate, though, as traders awaited news on negotiations over a fresh round of stimulus amid a resurgence in coronavirus cases around the globe. House Speaker Nancy Pelosi told Democrats that a COVID-19 relief package won't wait until January, as she was scheduled to have another call with Treasury Secretary Steven Mnuchin. Your closing numbers: S&P down 5, a drop there of 0.1%. At the worst levels, have been down 47, a drop of 1.4%. The Dow recovered to close lower by 18 points, down 0.1%. Got to keep in mind that at the worst level of the day, the Dow had been down 332 points, a drop of 1.2%. NASDAQ ended 54 points lower, down 0.5%. Worst level there had been down by 1.8%. 10-year yield 0.73%. Gold up 0.3%, 19.07 the ounce. West Texas Intermediate crude little changed, 41.02 for a barrel of West Texas Intermediate crude. A lot of questions about how the presidential election will play out with markets. Morgan Stanley's CFO told Bloomberg earlier today a blue wave is already priced into markets. And moments ago here on Bloomberg Business Week, Walter Todd, President and Chief Investment Officer at Greenwood Capital, spoke about the election.
The big changes people like to talk about are really unlikely regardless of the outcome, because it really goes down to the Senate and who controls that. And the reality is the control either way is going to be 1 or 2 seats. And so there's not going to be the flexibility to do a lot of dramatic changes. There'll certainly be policy differences between the two administrations for sure. But as far as making any big moves ahead of the election, we would not kind of advise that.
And again, recapping, equities lower with the S&P slumping 5 points, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
Time to do some moving and shaking on this Thursday. Are you shaking over there, Paul, in New Jersey?
We are in New Jersey. Yes, we are.
Seriously? I want
It is a beautiful day here.
It's like
Say
one
it.
of the. It's
Just
another
say it.
one of those perfect fall days, right?
Yep, that's right.
Love it. Carol Massar, Paul Sweeney, and we've also got Bloomberg News cross-asset reporter Sarah Ponzek. She's back in our Bloomberg Interactive Broker studio in a lovely day in New York City. So let's do big picture. S&P 500. What a wacky day. Charlie giving us those closing numbers, and we finished well off our lows of the day. Quite a little bit of a move off those lows. In fact, 319 names in the S&P 500, ultimately ending with gains today. 182 lower, 4 unchanged. Major industry groups in the S&P 500, there are 11. Top of the pack, energy, which, as we know, has been beaten up big time, certainly throughout the year. It's up about 1.2% at the close here on this Thursday. Bottom of the pack, healthcare, down about 0.7%. So, Sarah Ponzek, you're sitting there alone in that studio. It's all yours. I miss you. I was there with you yesterday. It was really
I know.
nice.
It was really nice having you here in person. And I also must say I'm a bit jealous because I really have not been outside today. So I'm going to have to get out there and see how great it is, actually. But an interesting day on Wall Street. So very, very light volume. I should say that off the bat. About 8 billion shares did trade hands, which in a normal year would be high. But in 2020, that is low. One of the lightest trading volume days of the year, at least since February, since all this volatility really took hold. But
what's going on? Why is it so low?
Well, it was just a quiet day. One, we do have an options expiry coming up tomorrow. I also think there's just a lot of waiting and seeing right now. Sure, we're in the middle of earnings season. We had Morgan Stanley today rounding out for those big banks. However, at the same time, there is not a lot of material new news to trade on. Sure, and it was a bit shocking that it was a bit brushed off, and we did see a bit of a sell-off over in Europe, but what we are seeing over there in terms of COVID case counts rising, we have a curfew now in Paris. In London, we are seeing more restrictions at the same time. Even today over in the U.S., here, when you look at the labor market, when we look at initial jobless claims today, we did have an unexpected rise, which really brings some doubts over this labor market recovery, what that means for the future, and the fact that we were able to see stocks still close in the red, but trade higher through the majority of the day. And if you look at the areas of the market that did lead, I mean, very much cyclical areas, energy, financials finally got a bid after the last couple of days. Banks were actually your second best performing industry group, up 1.4%. Then the likes of industrials, for example, small caps were also higher by 1%. And if you look at the S&P 500, an equal weighted version, to kind of strip out the overly excessive effects of your big cap tech names that were lower today and dragging the benchmark down, an equal weighted version of the S&P was actually higher today. So that does tell you something.
Yeah.
Bloomberg Stocks Editor Dave Wilson, what were you seeing today in the market? Again, kind of bounced off the bottom. I'm sorry?
We're
back to Sarah. I thought we had Dave in here now.
We will. He's gonna. We kind of do a build up, and then we.
Then we close
do
with Dave.
fireworks, and then we do stock of the day. But
then we do stock
yet.
of the day.
I thought I was so lucky, and Dave was joining us.
Exactly. So coming up off the bottom here, Sarah. I mean, does that tell you that the market wants to work higher here? Is that kind of what some of the folks are saying?
So Mohamed El-Arian was on Bloomberg Television last week, and this is what he said. As we have heard people looking at this market that has been rallying ever since that September correction, many are looking at a blue sweep, or the idea that we may have COVID treatments or vaccines in the near future, and trying to backfit a narrative to this market that has been rallying. And what he said was just, this is a market that wants to go higher. And I think that really does just strike a chord, because yes, we all always try to look for a reason why markets do what they do. And on a micro level, that's more so easy, especially when you're in the midst of earnings season. Things might make sense. If a company reports better than expected earnings or lifts their forecast going forward, you might expect that stock to rise, although that hasn't been the case so far in this earnings season, where the average stock has actually fallen, even with a record beat rate. But it does just seem internally, this is a market that still wants to go up. You can look at very low interest rates possibly as the reason for that, but still just notable that we had low volume today. So it's hard to take too much away from any one trading day, especially when volume is relatively light.
Yeah, it's FOMO, it's TINA, pick your acronym, right? It's
Right.
like, there's like only one game in town. All right, Sarah Ponczek, we have fireworks for you too, just so you know. I just didn't want you to feel left out. All right, Sarah Ponczek, our Bloomberg News cross-asset reporter, back there in our Interactive Brokers studio. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
Paul Brennan. Now I'm talking about my producer, Paul Sweeney. Man, it's Wacky Thursday. It's Bizarro World. Let's bring in Dave Wilson to set us straight. He's got his stock of the day. What do you got for us, Dave?
Well, sleep number, Carol. Maybe that's what we all need, is a little more sleep. In any case, the company is a maker and seller of adjustable beds. The number refers to the bed's firmness, which can be set between 0 and 100. Most of the company's products feature air mattresses, and the rest use memory foam. Sleep Number was founded in 1987 and went public in 1998. The ticker is SNBR. The company's shares plunged as much as 75% this year and reached an 8.5-year low in early April. Sleep Number has since recouped the entire loss and then some. The rebound accelerated after the company reported third-quarter results late yesterday. Sleep Number's earnings rose far more than analysts expected, based on the average estimate in the Bloomberg survey. Revenue also exceeded projections as online and telephone sales more than doubled. Sleep Number reinstated full-year forecasts and said it would resume stock buybacks this quarter. All this sent the company's shares to a record. They closed with a gain of more than 11%.
It's up 31% this year. I always love talking about mattresses with Dave because, Dave, what's the mattress? You don't sleep on a Sleep Number, but you have a really cool mattress, too. You've told us before.
Oh, yeah, I sure did. A duck's bed.
Ooh. Sounds soft.
It's very posh. I'm just going to put it out there. Well, it makes sense, though, that it's going up. I mean, I think people are investing on all things at their home, and, you're like, I want a good night's sleep. I'm going to get a new mattress.
Absolutely. Yeah. Yesterday, we were talking about stereo systems. Today, we're talking about beds. Same idea.
Yeah, it's where everybody's thinking about spending money. What kind of bed do you have, Paul Sweeney?
I'm not sure, but it's very comfortable.
Okay. All right, we're going to leave it there. Dave Wilson, thank you so much. Dave Wilson, his stock of the day is Sleep Number, ticker is SNBR. All right, let's get a check on world and national news headlines. For that, it's over to Ed Baxter in San Francisco. Hey, Ed.
Well, that was such a guy answer that.
It was a guy. What kind of mattress do you have?
What an awesome answer. Yes, I don't know.
Pillow top, no pillow top? Why?
Comfortable.
Yeah.
Kamala Harris is off the campaign trail for live events for the next few days. This after 2 aides tested positive for COVID. She has tested negative.
In the statement, we also gathered that they say the 2 aides did not come into direct contact with Senator Harris as defined by CDC guidelines.
Bloomberg chief Washington correspondent Kevin Cirilli says it'll not affect the Biden town hall tonight, and Harris plans to be back on the trail on Monday. Senate Republicans today say they will vote to subpoena Twitter head Jack Dorsey next week to respond to taking down the New York Post ad regarding Biden and Burisma.
The power behind these platforms have been taken to a level that truly is dangerous, I think.
Senator Lindsey Graham, meanwhile, he now says there's a good chance Donald Trump may lose the election. Concerned groups chancing today to express concern about the confirmation prospect of Judge Amy Coney Barrett. 2 differing views, the first from Kristen Clark for the Lawyers for Civil Rights.
Her record suggests that she would be inclined to make it easier to expand individuals' rights to obtain and use guns.
And then from the American Bar Association.
Descriptions of her intellect are captured with comments such as these. She is whip smart. She's highly productive, punctual, and well prepared. A brilliant writer.
Pamela Roberts saying a brilliant record. In San Francisco, I am Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Paul Sweeney. Story that caught our attention, it's popping up among the most read, on the Bloomberg, courtesy of Dow Jones Wall Street Journal. And it has to do, Paul, with the Grizzlies owner. And he's kind of under the radar, but man, when you start going out and buying up trophy homes, you're not so much under the radar anymore.
Yeah, it's interesting. He's 42 years old. A founder of the wireless equipment maker Ubiquity Networks. And he's doing what a lot of people who amass, a certain level of wealth is. They're going out and they're buying stuff. And what people like to buy is real estate. You're seeing Elon Musk, on the other hand, say, I'm selling everything.
I know.
I'm going to make it more simple. But this is kind of the norm that we see when people come into money. He owns the Grizzlies, so he's got that box checked in terms of...
Is it Para? How do you say it?
I think it's Para. That's how that's how I've always heard it. And so he's checked that box. He's got that. And now it's, New York, Miami Beach, places you like to see. I thought I'd see something here about Aspen or something like that.
Because you're thinking I'd like to be in Aspen right now.
Exactly, right.
So he spent about roughly $70 million. You're right. So New York, Seattle. He's building a brand new mansion on a highly exclusive island in Miami Beach. That also would be nice right now, according to public records and people familiar with some of his transactions. I guess he had an LLC that recently purchased a $21.55 million penthouse at 56 Leonard Street.
And you know that building. I'm not sure you know it. When you see it, you know it. It's the one that's got it's cantilevered, so every apartment has like incredible window views.
That's downtown, right?
That's downtown.
I know what it is.
It is a funky building. It catches your eye all the time.
It's like the Jenga building, isn't it?
Yes, yes. So I think you have to have an appreciation for some, out-of-the-box thinking, out-of-the-box design, but it is a building that catches your eye. It's in a cool part of town, a fun part of town. So I thought that was pretty neat to see. He bought a unit there.
I have to say, reading about real estate is like sports pages for you guys.
Yes,
that's how it is for me, right? I just kind of love it. All right, this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Final numbers don't tell the entire story. Choppy session, down day, but stocks did pair losses as traders awaited news on negotiations over a fresh round of stimulus amid a resurgence in coronavirus cases around the globe. Keep in mind that at the worst level of the day, the Dow had been down 332 points, down 1.2%. It did recover to show a loss today of 19 points, down about 0.1%. The S&P finished 5 points lower, down 0.2%. Worst level of the day, it had been down 1.4%. Nasdaq down 54, a drop there of 0.5%. 10-year yield 0.73%, down 2/30 seconds. Gold up 0.3%, up $5 the ounce at 19.07. West Texas Intermediate crude down 0.1%, lower by 5 cents a barrel at $40.99. Recapping equities, lower S&P down 5, down by about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the whole world is definitely being turned upside down. We know that, Paul. We talk about, industries, just life in general. We're rethinking how things have been done. We're pivoting. And that includes car buying. We've talked about this on our show before. We've got a deeper dive into how COVID and a crowd of startups are shaking up car buying. Bloomberg News senior writer Kyle Stock is with us on the phone from Wyoming. And I want to get into your story, which is featured in the Hyperdrive section at Bloomberg.com, which is kind of where we all go to find out about the future of transportation. But tell me about Wyoming. How is it there, and how is it in terms of COVID, Kyle?
It's great. My family lives in New Jersey, and our thesis was we'd get out here and it would be safer. But of course, as on our way out, the numbers started ticking up. But it's beautiful. And the aspens are turning, and the animal is moving around, and the skiing is going to start soon. So
if you have to work from home, to do it in Wyoming is not too shabby, right?
That was the theory, yeah.
And Kyle went to college at Colorado College, so he knows his way around the Rocky Mountains. Kyle, your story's fascinating here. I first, when this thing hit, this coronavirus, a good buddy of mine, he does run some dealerships, and it just completely turned their business upside down. They were closed for a while, but now they're starting to get back. But what's changed is people are much more comfortable shopping online for automobiles. What did you find?
Yeah, that's exactly what's happening, and it's just what we've seen in other industries. It's just kind of late to the auto industry. There's this crowd of startups. They're doing for auto e-commerce what Wayfair did for furniture, what Casper did for mattresses. They have strong web platforms, really good service, no haggle pricing, and then all the other stuff, warranties, financing, all that stuff. So you really don't have to go to a dealership anymore. The startups are mostly focused on the used market, but they're really, the pandemic gave them a huge tailwind. But it's not just that, it's just the stigma that traditional car dealers have had for a long time and have been slow to react to, that, there's a lot of momentum going into this new space.
Well, and one of the names we talk about a lot is Carvana.
Yeah.
Tell us about the role that they're having, certainly, and then kind of the growth in their business as a result of the pandemic.
Yeah, so Carvana's kind of the oldest of this crop. They launched about 7 years ago, and it's actually the son, Ernie Garcia, the son of a traditional dealership. So he's kind of the young blood, and he's got a new idea to do some digital disruption. And they've been around the longest. They definitely have the most volume out of this crop. And they just, the first and second quarter, there was a blip in the second quarter because everyone kind of hit pause, but then they just started doing tons of business. So it looks like this year they'll sell at least 200,000 or 300,000 cars in the U.S., and Ernie sees a path to 2 million, which would be 5% of the total U.S. used car market.
So, Kyle, what I found fascinating here is when the factories shut down here in the U.S., okay, there's a supply problem there for new cars. And so the demand for used cars went up. I wasn't even thinking about that. It's just hard to get a car these days.
It is. And used car values are going up. Used car trade-in values are going up. So, what kind of set me off on this story is my second kid just turned 1, and we were in the minivan market.
Good for you.
We knew exactly what we wanted.
I just got out of the minivan.
See, and I was just going to say, I'm so sorry. I'm so sorry.
No, I love this thing. I'm never leaving it. I'm going to keep it after the kids are in college. But I was pretty resigned to buying a new one, and I found a few great ones at decent prices, and I just couldn't get the deal done without a dealer saying, hey, come into the showroom, or doing these tricks you hear about. And it was infuriating. So I ended up on one of these sites. It's actually Vroom, one of Carvana's competitors, and I bought a car in 10 minutes.
And did it go well? Did it go well?
It was fantastic.
Yeah.
They dropped it off in my driveway 2 weeks later. I waved to the delivery man, and I had 7 days. If there was anything about it I didn't like, they would come get it, give me my money back, no questions, and it's been incredible. We drove it out here, so there you have it.
And nobody pressuring you to get the insurance on the tires,
Right.
or remember
The
when they used to
underspray.
the underspray, none of that, right?
Yeah, none of those tricks.
But what if something goes wrong? What's your fallback on that?
Yeah, so most of these cars are still. My car was 3 years old, so it's still under manufacturer's warranty. But all these platforms offer warranties or insurance or extended warranties. Most of them have, a short 7-day, no questions asked window, and then a larger window in which they will fix any problem with the car. Like 100 days, something like that is kind of the standard for them. So they're really on their best behavior because they can't afford the bad reviews at this point. They're so young, they're still building momentum. So they're really going out of their way to do right by the customer. And it's really showing up in people raving about them on social media, telling their friends. That's part of the flywheel effect. And the more business they get, the better their unit economics get. I mean, the more cars they can put through reconditioning, get on the platform, move, deliver, ship, etc.
I got to say, I just remember when, was it a few years ago with Carvana, and we saw the vending machine, and we're all like, oh, isn't that funny? What a joke, what a joke. And yet, here we are, and it's disruption at its best. Kyle Stock, always fun to talk with you, senior writer at Bloomberg News, usually here in New York, but he's on the phone from Wyoming on this Thursday. Great story. Check out his work on Twitter at Kyle Stock. All right, you're listening to Bloomberg Business Week. Coming up, we're going to talk about a little bit more disruption, so stick around. We're talking with the co-founder and CEO of Wealthfront.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week. Carol Master along with Paul Sweeney. We just talked about disruption in the car space, but man, the financial space continuing to go through, right? Some new upstarts. We talk a lot about Robinhood, but we're going to get a front row seat to all of this. We're going to check in with one of the co-founders and CEO of Wealthfront. We'll get to that in just a moment. Right now, though, back to your top business story, some of the news after the close. Here is Charlie Pellet.
Hi, thank you very much. Turned out to be a down day. Carol Master with the Dow, the S&P, and NASDAQ all slumping, but U.S. stocks finished well off session lows. S&P fell 5, down by about 0.1% at the worst level. The S&P have been down 1.4%. The Dow was down 19, lower by 0.1% at the worst level there. The Dow had been down 332. NASDAQ was down 209 at one point, finished with a loss of 54 points, down by 0.5%. 10-year yield 0.73%, down 2/30 seconds. Gold up 0.3%, 19.08 the ounce, and West Texas Intermediate crude down by about 0.1%, $40.98 a barrel on West Texas Intermediate crude. Stocks did pair losses as traders awaited news on negotiations over a fresh round of stimulus amid a resurgence in coronavirus cases around the globe. S&P came off session lows as banks rebounded from a two-day sell-off and energy shares rallied. Less than 3 weeks to go before the presidential election, Carlyle Group says it is well-positioned no matter who wins, and in a Bloomberg exclusive, our Jason Kelly spoke with Carlyle Group CEO Q-Song Lee.
There are lots of issues, lots of scenarios to look at. Everyone talks about tax policy, but you also have to think about regulatory changes. You have to think about fiscal stimulus, and you have to think about all the other offsets to tax. And so we're looking at it. I think we're going to be prepared, and we're modeling out a whole bunch of different scenarios. I think we're going to be well positioned no matter what the outcome is.
Peloton Interactive has been sued for patent infringement by Icon Health and Fitness, the maker of the Nordic track bike, escalating the legal tussle between the two fitness giants. Today, we did see shares of Peloton advance by about 3.8%. And one other story to tell you about, Fiat Chrysler Automobiles has agreed to invest as much as $1.1 billion in one of its two assembly plants in Canada as part of a tentative agreement reached with more than 9,000 local auto workers. Recapping, stocks lower, S&P 500 index down 5, a drop of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Paul Sweeney, and we talk a lot about Robinhood, founded a few years ago, and how we've seen it really explode in popularity this year. We continue to see the financial sector being disrupted by a lot of newer companies. One company that really came on the space a few years ago, and really one of the first firms to start disrupting financial investing and the industry, was Wealthfront, changing how investors manage their investments, taking it online. So let's bring in Andy Ratcliffe. He is co-founder and CEO of Wealthfront, and he joins us on the phone in California. Andy, it's great to have you here with Paul and myself.
Thank you for having me.
So first of all, we do want to talk about some of the new features that you've got, but first up, just want to ask you about what your world has been like since COVID. I mean, take us back to March and then kind of where we are today and where you guys are with your teams and everything.
Well, first let me give a little bit of context so I can answer that question. So for your listeners who are not aware, we're a next-gen banking service that helps young professionals manage their money. So we provide high-interest checking and low-cost investment management services all through a 5-star rated app. And our vision is to automate all of your finances. We call this self-driving money, and by that what I mean is you can direct deposit your paycheck with us. We automatically pay your bills and then route the remaining money to the most appropriate investment or savings account depending on your situation and goals. So with that in mind, the thing I think that's affected us the most are, I think there's been a bunch of people, rather than wanting a diversified and managed portfolio, I think that day trading has really taken off this year.
Right.
And the other big thing that we've noticed is that with the drop in interest rates, people are more inclined to day trade or try to pick securities in order to make up for the fact that they're not earning that interest on their savings.
So, Andy, during this pandemic, I've upped my digital banking game pretty substantially, I must say. And I find, and with a number of financial institutions, so it seems like these big players, they're investing money in fintech, they're investing money in their front-end platforms as they integrate with their consumers. What's your competitive advantage going against maybe some of the big commercial banks or brokerage firms and things like that?
Well, I would say that it's business model and technology. So first, let me talk about business model. Traditional banks use branches. And what most people don't realize is that the average branch costs the average consumer $200 per year. So if you take the cost to operate a branch and divide it by the number of people that it serves, it costs you about $200 a year, or costs the bank $200 a year to offer that branch. Well, they've got to pay for that. And the way that they pay for that is through a number of fees that most people don't like. Next generation banking services like Wealthfront don't charge those nickel and dime fees. So you're going to be far better off, first of all, just not having the fees. Second of all, we pay interest on our balances. We pay 0.35%. I use Wells Fargo. They pay me 0% on my checking balance. So the fact that they have to support branches is a real negative for young people who don't want to go to a branch. It's probably a positive for a baby boomer who likes that personal interaction. So it's a very generational thing. On technology, banks are terrible at developing software. You know, J.P. Morgan Chase got quite a bit of attention a few months ago because they wrote off their personal finance app called Fin. In contrast, Wealthfront is the highest rated financial app in the App Store. Just because both companies offer software doesn't mean that they're of comparable quality.
So listen, hey, sit tight, Andy. We've got to do a little bit of news, but I want to come back. And, you know, what we love talking about you is certainly hearing what you guys are doing, but you really understand kind of all of the changes, you know, and trends that are really impacting the financial and investment world. So we want to dig a little bit deeper into that, if we may, when we come back. We're talking with Andy Ratcliffe. He is the co-founder and CEO of Wealthfront. It's really a well-known name to our audience. We've talked about it a lot since it came out several years ago. So we'll continue that conversation. I mean, listen, Paul, this is the world. I mean, especially like you talk about all the online you're doing. I find increasingly too, because of COVID, we're all of a sudden doing so much more online
But I'll
than we
tell you
used
what,
to.
I'm not going to change. I still have cash in my pocket, unlike the kids.
My husband was talking about, you know what, the cash I had back in March, I pretty much still have it in my pocket, which is really kind of crazy. All right, let's get back to world and national news. For that, it's over to Ed Baxter in San Francisco. Hey, Ed.
Okay, Carol. Hey, Dr. Anthony Fauci is saying today the CDC hasn't been at the forefront of the COVID-19 response due to a variety of circumstances beyond their control. He says the agency has a large number of very talented professionals who've had the experience and capability of responding to outbreaks, but haven't been able to do so. Separate, maybe. He's still expressing displeasure over being in a Trump campaign ads.
The way I was juxtaposed in that ad, it made it look very much like I was part of a political campaign. And I'm expressing that I don't like that.
He says campaigns or administration should not interfere with the ability to try to fight disease. On that front, he's expressing an opinion about Thanksgiving planning.
If you have vulnerable people, the elderly, or people with underlying conditions, you better consider whether you want to do that now or maybe just forestall it.
Yeah, he says he understands the warm feelings surrounding the holiday, but Donald Trump on the campaign trail today.
Look at all the masks. You know, they keep saying nobody wears masks. Wear the mask.
A turnaround. And Kamala Harris is off the campaign trail for a few days after 2 AIDS testing positive.
She has halted all travel through Sunday. She'll be back on the campaign trail, according to her campaign, on Monday.
She's tested negative and as has Joe Biden, will participate in this town hall tonight. Senate Republicans say they're going to vote to subpoena Twitter CEO Jack Dorsey next week.
Never before have we seen active censorship of a major press publication with serious allegations of corruption of one of the two candidates for president.
Senator Ted Cruz, Twitter says the story is just not true. In San Francisco, I'm Ed Baxter.
All right, Mr. Baxter, thank you so much. You're listening to Bloomberg Business Week on this Thursday. Carol Massar along with Paul Sweeney. Paul, I don't know if you saw this story about college sports. They're going to halt on Election Day so athletes can vote. This is kind of a new tradition beginning in collegiate athletics, a total shutdown.
Yep, and they're calling it all vote, no play. I think this is part of, I have one of my children, 24 years old, has become super engaged in this political process. Unlike any, I think that's a trend of kids, not kids, young adults. There's a growing wave, I think, of a sense of I need to be a part of this process. I want to be a part of this process, and I think the schools here and their academic departments and their sports departments, in this case, they recognize that, and they're trying to respond.
It's so funny that you say that. My daughter, who's 17, is very bummed out she cannot vote in this election, and she's got a friend who is just about to turn 18, and she's like, she gets to vote, I don't get to vote. But I love the engagement that we're seeing among a younger generation. I think that's a really good thing. And I think, what colleges are doing, I think, also begs another question, because I think a lot of Americans I've often just gotten in as a poll was closing to make my vote because I didn't have time to, get there before I went to work. I live in the city. I work in New Jersey. Like, it's really tough sometimes.
Yeah, it's interesting. I sent a kind of a fatherly text out to my 3 voting age kids to make sure that they vote, and they all came back within a seconds and we already did that, So basically, I'm still waiting for November 3rd to go into the local elementary school. They're all done and dusted.
I know that's the interesting part, right? That they really figured this out and how to do it and make it really kind of work within their schedules. What we're talking about, though, the story on the Bloomberg, Division I athletes will be prohibited from practicing, competing, or participate in any athletically related activities on November 3rd, and that's all about, as you said, the All Vote No Play initiative to get them out to vote. And I'm really curious, Paul. I can't wait to see the voter turnout come November.
Yeah, because it hasn't been impressive from the younger voters. We'll see if it changes this year.
All right, you're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It was a down day on Wall Street. We did have an IPO surge, though. Array Technologies jumped 66% in its trading debut after its expanded IPO raised $1.05 billion for the solar company and its largest shareholder. As I mentioned, a down day. Final numbers, though, don't tell the entire story. Stocks finished well off session lows as traders awaited news on negotiations over a fresh round of stimulus amid a resurgence in coronavirus cases around the globe. Today, we saw the S&P 500 index slump 5 points, down by about 0.1%, have been down 1.4% at the worst levels of the day. The Dow down 19, lower by less than 0.1%. NASDAQ finished 54 points lower at 11,713, down by about 0.5%. 10-year down 3/30 seconds. 10-year yield 0.73%. Gold up 0.4, 19.08 the ounce, and West Texas Intermediate crude down 0.2%, $40.96 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest, Andy Ratcliffe. He is co-founder and CEO of Wealthfront, on the phone from California. And you know, Andy, you have seen a lot of cycles in the financial industry. You co-founded, were a general partner at Benchmark Capital. You've been an investor in the likes of Juniper, Equinox. I mean, you see the world from a lot of different angles. When it comes to specifically, though, the financial industry, what do you make of something like a Robinhood?
Well, every once in a while, something comes along that really just captures the industry's imagination, and free trading really did that. And they've done a superb job of growing the business as a result of offering something that people really wanted.
It's interesting, Andy. I think, you know, we're all old enough, sadly, I guess, to remember the dot-com boom, day trading, that kind of thing. It didn't turn out very well for some of those folks, and it kind of signaled in hindsight that was clearly a peak in the market. Any concerns about that here, or do you just feel it's different this time?
No, one of the funny things is that every 15 years or so, there is a day trading boom, and it usually coincides with a market that's gone up by 40% in less than 6 months. Because when the market trades up very, very significantly, it's like shooting fish in a barrel. Any stock you pick is going to go up. The mistake that individual investors make is they confuse absolute performance with relative performance. You know, if the market's up 40% and you're up 25, you think you're a genius, and you're actually terrible.
So wait.
So it always happens when markets go up very, very, by a large amount very, very quickly.
So does this one end poorly then, you think, for a lot of investors who maybe only think the market goes up?
Of course. It always does.
Yeah.
So, Andy, I know you at Stanford Business School teach some courses on technology entrepreneurship. I'd love to get your thoughts about the feeling, you're close to Silicon Valley, what this pandemic may do, if anything, to the sense of entrepreneurship in this country, maybe the willingness to finance risk. Do you think it's going to have any impact, or innovation, and it will find its way?
The latter. Innovation is innovation, and it's going to find its way. I think that the big change that's going to result from the pandemic is a greater embracing of remote workers. You know, our company, as an example, we shut down on March 13 when we went to shelter in place. And no one has been to our office since. And, you know, you can either fight it or you can embrace it. And we've learned that there are many things that we now do that actually lead to better productivity. So when we are allowed to go back to the office, and we've told our employees that we won't expect them to go back until there is a widely available vaccine, we think that actually not everyone will go back, and we'll embrace that.
What works better? Because I know that there's a really big debate, Andy, about productivity, and depending on who you talk to, some say it's fine or it's even better. Some say not so much, and that people miss that face-to-face, that running into somebody, you know, with an idea, and then you move off of that.
I think you need to drill down into it. What we have found is that our productivity among our younger single employees has gone up because they actually don't have something else to do, so they tend to be working more. Our productivity for our employees who are parents with young kids has plummeted. But the vast majority of our company is made up of young people who are single. So when you average them out, our overall productivity is up.
Andy, what's the feedback you're getting from your students at Stanford Business School here? How are they maybe viewing the world here? I mean, they're going to be a generation coming out in a pandemic. I'm wondering if that's changed their views of the world, or maybe beginning to change their views of the world. Are you sensing any of that?
I tend not to fall into that because the current environment is not indicative of the future. This is an important consideration in investing. The biggest mistake that investors make is that they project the current environment onto the future, which is why, the biggest mistake researchers have found and individual investors make is that when they buy when the market goes up and they sell when the market goes down, because they think that's what's going to continue. So I counsel my students not to pay attention to this at all. It's likely to make finding a job a little bit more difficult, but long term, I don't think it's going to change their prospects.
What about the prospects for colleges and universities? We know some of them are financially having a tougher time right now, and I know you're on the board of trustees and chairman of the endowment committee at University of Pennsylvania, and I do wonder, what do you see when it comes to academia? What happens maybe where there might be some longer term impacts because of COVID?
And what might those longer term impacts be?
Well, maybe more hybrid, or maybe some fallout among some universities that aren't as financially stable. I almost feel like, just like we've gotten over retailed, Andy, I feel like we've gotten over schooled here, especially when it comes to higher education.
That's been the case for decades, though, and that doesn't seem to winnow out the less financially stable universities. They seem to make it through. So I guess I'm not as concerned about that.
So you don't really see any fallout, and you think even financially, if schools might have a tough time for maybe this year, maybe next year, they'll be okay. They'll weather through.
Exactly. The same was said during the financial crisis in 08 and 09, and everyone seemed to have made it through that.
Hey, before we go, you guys did have an announcement, and I know you guys have a new service. Talk to us a little bit about that, because I do feel like companies, especially because of COVID maybe, or maybe it was in the works anyway, are kind of, thinking of, some initiatives that maybe were in the works they pushed out even sooner.
Well, with software development, you can't push something out
That's
sooner.
true. That's fair.
It's like being pregnant. You have to finish writing the code. So I wish that were the case for a software company. Maybe a services company, you can do that. But in our case, I talked earlier about our vision of self-driving money. And a few weeks ago, we launched our first feature in the self-driving money area that we call Autopilot. It automates your savings, and it makes banking and investing work better together. So you can think of Autopilot as a financial assistant. So basically, the way that it works is you pick the account that you want it to monitor, be it your checking account or your Wealthfront cash account. And whenever your balance goes at least $100 above the threshold that you set, we automatically move the money to an investment account of your choice. And that way you can make sure that your money is much better optimized than if it's just sitting around and not earning anything. And so that's the first of many features that you're going to see in our self-driving money initiative. And over time, you're going to see more sources and destinations for that money, and we're going to move that money much faster.
Well, I hope you'll come back and talk some more, Andy, because I think we could easily sit down for an hour and just keep on talking, because you just look at the world in so many different ways.